Welcome back to the Hunter of Dividends YouTube channel. Here to talk about Walgreens Boots Alliance, ticker symbol WBA. This is a viewer request to take a look at this dividend stock. So let's get into this one. Let's jump right into it. I know your time's valuable, so we're going to jump right into this here. Walgreens Boots Alliance, 5.02% dividend yield, dividend safety score of 79 here at Simply Safe Dividends. Let's take a look quickly at the chart of Walgreens Boots Alliance here for the last 5 years. Really nothing good been going on in the last 5 years. It was all the way up in the 70s, down to 38.22 now. Not too far from its low for 5 years, which was about 34 in October of 2020. Walgreens long term, if you look at the maximum, this has kind of been dead money here, 38.22 now, and it was it was above 40 in the year 2000. I'm concerned at Walgreens' lack of growth. This is a company that's just kind of stalled out. Certainly, if you like the high income, then the high dividend yield from Walgreens, 5.02% is kind of hard to argue with. But there are some warning signs here. The dividend growth, 0.5% last time. The beta, 0.71. Let's look at the dividend growth long term. You see it's slowing down in a big way, 5% in the last 5 years. And if you look at the payout ratio, it's starting to creep up to the point where Simply Safe Dividends says it's not quite below what they want for a consumer retailer. Now, you could argue what Walgreens should be counted as, whether it's healthcare, retailer, it's a little bit of everything, obviously. But the free cash flow ratio here in the last 12 months jumps to 48% as far as the payout ratio. So there's less room here for dividend growth. The earnings per share growth has not been there here lately. We've had 3 years and the negatives earnings per share growth. Sales growth was down in 2019. Shares outstanding has stayed about the same. Return on equity has been a bit low, lower than what you want it to be, certainly. And this is a company, return on invested capital is extremely low. So the operating margin at 3%, 2%. I don't love what this company is doing right now. I have to say, this is not a stock I own. I will not be owning Walgreens Boots Alliance. I don't blame you if you hold this one. If you look at a lot of the research from respected analysts, a lot of them have a hold on this one. If you do already have it, I hate to sell it at this price because it's down so much and you are getting that dividend yield. I really wouldn't want to buy more into this one. Has quite a bit of debt too. The net debt to EBITDA over 4 here in the last 12 months. They prefer below 3. Interest coverage is pretty low. So again, we're seeing high debt here from Walgreens Boots Alliance. Let's look here quickly at fast graphs to see what it looks like from a valuation standpoint. Valuations wise, this looks like a cheap stock. This is a PE in the 7 range. It's hard to argue with that. From a historical standpoint, this looks like a cheap stock. If we look at just the last few years, you see it starts to flatten out and look a little bit more average because the market doesn't want to pay a lot for the stock. There's just not enough growth. The story hasn't been that good. So the longer term you look at it, looks like it's very cheap. But if you look at the more recent run, this looks like about what it's usually been trading at. So is there a new normal for Walgreens, or is it going to go back to what it was before? I think that's really the important question on whether you want to own this one or not. Let's look at the operating cash flow. Again, this looks a bit lower than what it has on average. The blue line is what it is usually traded at. That's in a 15-year span. The 5-year, it's right at the average. So if we go back, look at sales. Sales here for Walgreens. Again, the 15, this looks dirt cheap, really cheap. Now let's look at 5 years. Again, it looks fairly cheap. Sales growth is just not really there that much. Let's look at forecasting. The estimates, if you look at sales, look out at the estimates. This looks like a good stock rate of return, certainly based on the normal price to sales. So certainly looks undervalued if you just look at a historical standpoint and then look at the earnings projections as far as sales. Let's look at operating earnings here. Definitely a different picture. It doesn't look bad, but it looks like maybe a 8, 10, 11% rate of return year over year. And then if we look at cash flow, which the free cash flow was looking a little bit more concerning here of late, analysts are having a hard time estimating what to do with the cash flow here because they did dip. So I don't know how much I trust these estimates. If you look at fast graphs, you think maybe this is a good valuation point for Walgreens. If you look at Simply Safe Dividends and some of the balance sheet information for Walgreens and the future growth projections, I'm a little bit worried about this one. So if you own it, I wouldn't blame you for holding it because of 5% dividend. And remember, Simply Safe Dividends does say this is a safe dividend stock. So 79, they think that the dividend is well covered. So I don't blame you on that. Let me know what you think in the comments below. What do you think of Walgreens Boots Alliance, WBA? Do you like this stock? Not like this stock? Why or why not? If you have any requests for future stocks that you want me to cover, certainly drop those below or mention those to me at Hunt Dividends on Twitter. Give this a thumbs up. Subscribe to this channel. I certainly appreciate it. Everybody, have a great weekend, great week ahead, depending on when you're watching this. And we'll follow up again soon with some more dividend stocks.